Good morning, everyone, and welcome back to the channel. Let's dive right into our weekly market wrap-up, focusing on the latest movements from the Toronto Stock Exchange. It's been a fascinating week, filled with some significant shifts and noteworthy performances. So let's break it all down. The S&P TSX Composite Index has been on a bit of a roller coaster ride lately. We started the week with some cautious optimism, but macroeconomic factors, both domestic and international, have certainly been playing their part. The main story continues to be the ongoing dance between inflation data and central bank policy. Here in Canada, the Bank of Canada's recent commentary is still echoing through the markets. Investors are parsing every word, looking for hints about the future path of interest rates. This week, we saw some mixed signals. On one hand, certain economic indicators suggest that the Canadian economy is holding up relatively well. Job numbers have been resilient, which is a positive sign. However, inflation, while moderating from its peak, remains a persistent concern. This stickiness in inflation is what's keeping traders on their toes, as it directly influences the Bank of Canada's decisions. A more hawkish stance could put pressure on equities, while a dovish pivot could spark a rally. Looking at the sector breakdown, it's been a tale of two markets. The energy sector, a heavyweight on the TSX, has been closely tracking global oil prices. We've seen some volatility there, with geopolitical tensions and supply-demand forecasts from major organizations like OPEC and the IEA causing daily fluctuations. Companies in the oil and gas space have been reacting accordingly. It's a crucial sector to watch, as its performance has a huge impact on the overall index. Meanwhile, the financial sector, another cornerstone of the TSX, has also been in the spotlight. The big Canadian banks released their earnings reports recently, and the results have been a mixed bag. While some have shown strength in certain divisions, others have indicated concerns about loan loss provisions and a potential economic slowdown. The performance of the Big Six banks is often seen as a barometer for the health of the Canadian economy, so their outlook is being scrutinized very closely by analysts. Technology stocks on the TSX have been trying to catch a bid, often taking their cues from their counterparts south of the border on the Nasdaq. We've seen some interesting moves in Canadian tech names, especially in software and fintech. These stocks are typically more sensitive to interest rate expectations, so any shifts in central bank rhetoric can cause significant swings. For investors with a higher risk tolerance, this sector has offered both opportunities and challenges. Let's not forget about the materials and mining sector. Gold prices have been a key driver here. As a traditional safe haven asset, gold often sees increased interest during times of economic uncertainty. The price of the yellow metal has been fluctuating, impacting the stock prices of major Canadian gold miners. Similarly, base metal prices driven by global industrial demand, particularly from China, have influenced the performance of diversified mining companies. Any news about China's economic recovery or stimulus measures tends to have an immediate effect on these stocks. Consumer-related sectors have been telling an interesting story about the Canadian consumer. Consumer discretionary stocks, which include everything from retailers to restaurants, are feeling the pinch of higher living costs. Shoppers are becoming more selective with their spending, which is reflected in the earnings of these companies. On the other hand, consumer staples, the companies that sell essential goods, have been holding up more steadily, as demand for their products is less elastic. One of the more defensive plays on the TSX, the utilities and telecommunications sectors, have been performing as expected. These sectors are often favored for their stable dividends and predictable cash flows, making them attractive to income-focused investors, especially in a volatile market environment. While they may not offer the explosive growth of tech, their reliability provides a certain level of portfolio stability. So, what's the outlook for the coming weeks? All eyes will be on the next round of inflation data. The Consumer Price Index, or CPI, will be the #1 data point that everyone is waiting for. A hotter-than-expected print could spook the market and increase the odds of another rate hike, while a cooler number could fuel a relief rally. Internationally, we'll be keeping a close watch on the U.S. Federal Reserve. Their policy decisions have a ripple effect across global markets, and the TSX is no exception. The correlation between the two markets is strong, so what happens in the U.S. matters deeply here at home. For individual investors, this environment calls for a balanced approach. Diversification remains key. It's important to understand your own risk tolerance and investment horizon. It might be a good time to review your portfolio and ensure it is aligned with your financial goals. We've seen some standout individual performers this week as well. It's always worth digging into the specific companies that are bucking the trend. What's driving their success? Is it a strong earnings report, a new product launch, a strategic acquisition, or a positive industry-specific development? Identifying these winners can provide valuable insights into where the market is finding strength. Conversely, looking at the laggards can be just as informative. Understanding why certain stocks are underperforming can help you avoid potential pitfalls. Is it due to company-specific issues, or is it part of a broader sectoral downturn? Asking these questions is a crucial part of due diligence. Looking ahead, we also have more corporate earnings on the horizon. The guidance that companies provide for the upcoming quarters will be just as important as their past results. This is not a time for panic, but rather a time for careful consideration and strategic planning. We'll be back next week to dissect all the latest action from the market. Thanks so much for tuning in. If you've got value from this video, please give it a thumbs up and consider subscribing to the channel for more market analysis and updates. Hit that notification bell so you don't miss our next video.